Okay.
Guys, can you hear me?
Yes, sir.
Yes.
If I may, this is what I hear. I heard that the uncertainty, the unwillingness to act when he feels like he should. I think that there's a deficiency in what defines a point of action,
Hmm.
and also what is it that would have made these transactions easier for you, because you used the very thing I was waiting for a break in both of you speaking. I was going to come in and say it could go either way. It could go 50-50. Now, what do I teach in regards to probabilities? If you can see both sides of the equation being bullish or bearish, what does that mean?
It's not probable. It's low probable.
Right. In honesty, do you find yourself knowing that that's likely there, but your impulsiveness makes you want to still engage because you feel like you want to be doing something and you submit to that instead of being disciplined and not do it?
Not necessarily, because there's been examples of me not entering and price runs to my intended target and I just don't capitalize on the trade. But then there's other instances where I get in a little bit too early and then um price price either runs inside my fair value gap or I'm wrong in general and I lose on the trade.
When you enter early, what is it generally the catalyst that puts you in early? Like, what are you acting on that isn't there yet in the chart?
I'm acting on basically predicting where price is about to go.
And
Um,
you're not waiting for a defined entry. I just want to be on board because I
mhm.
might not be able to do it. Is that what you're saying?
I'm sorry, say that again. You broke up for a quick second.
Is it that you're trying? Okay, in other words, you have a very strong conviction about where it's going to go. So you know where it's going to eventually try to get to. So your draw, you're confident in that.
Correct.
But do you find yourself just not being willing to wait for a clear, defined PD array to act on and define the risk? And to overcome that, you just simply just plow in there. I'm on board. I'll weather whatever hardships come because I know it's not likely to reverse. It's going to get there. It might be a bumpy ride getting there. Is it kind of like that mindset that's putting you in it?
Correct. Exactly. Yep.
Okay, so now you just narrowed down your opportunity. What you have to do is you have to come to terms with, yes, I believe strongly that this is where the market's going to go. I believe it's going to get there. I'm willing to submit to it reaching for it. But now I have to find, where is it that I'm going to enter? What methodology am I using? Can I ask what it is that you usually try to employ when you do it? Like, what is the PDR you trade off of? What's your entry model?
Fair value gaps.
Okay. So are you not seeing the fair value gap on the chart yet? Or are you seeing the fair value gap and you're not waiting for it to retrace back into it, then repel price in your favor? Like, where are you at in the spectrum of, is it in the chart or it's not there yet?
It's in the chart. It's in the chart. I'm just not waiting for it to trade all the way into the fair value gap.
So you're opening yourself up to a larger measure of drawdown for fear that it may not trade to it and then you miss the move.
Correct.
Okay, that is an easy thing to overcome. Number one, you have to spend more time collecting old price runs. Go back to the old data on hindsight and see how many times fair value gaps do the very thing you're fearful of. It's rare. It's very, very rare. But when you're new or you're inexperienced with using these concepts, it it forces you to feel like, I know it's going to go there. I know it's going to go there and it's going to be real fast and I'm going to feel defeated because if it goes there and I didn't get in, I failed. That's not failure. You had the draw right. And when you go in your journal and you say, I got this right. I didn't have the opportunity and experience yet to participate on the entry because where you're at in your skill set and your development. There's nothing wrong with that. You cheerlead yourself. But what I think you're doing is you're being extremely hard on yourself. And as men, we do this. You're expecting to be perfect right from Jump Street. When you have enough to know where the market's going in your favor, where it's going to reach for, there's potential, there's profit there if you capitalize on it. So what you're fearful of is you haven't seen it enough times do the very thing I teach that it does. And that's just a matter of submitting to hindsight data, not trading, then tape reading, watching it. That's the key. Not entering on a demo, not doing a combine, not doing an evaluation, not trading a prop or live funds. Submitting to the idea that I'm going to watch this and I'm going to read every single candlestick as it happens. I'm going to watch every ebb and flow and tick that creates and watch it breathe and come into existence. And then when it expires, it goes to another candle. You submit to that uncertainty of what that next tick is going to bring. How is it going to work with the previous candles? Is it going to go back up into up close candles when it's bearish? How much does it go into that up close candle? You need to train yourself to feel that uncomfortable uncertainty. And then what happens is you have adopted a new mindset that's alien to you. Don't even, you might agree with what I'm saying, yes, it makes sense. It doesn't make any sense to you. It doesn't really make sense to you until you go through it and you submit yourself to it and you see that the benefits of having done so. You're not shaken, you're not rushed. There's no reason for any of you to feel like if I got an idea where it's going to go, I have to get in. I have to get in right now. Because if anybody else was saying that, and you have conquered this issue that you have right now, that's easily fixed. It just takes a little bit of time and effort. You'll get past it. But if you heard anybody else saying that, you would be scratching your head saying, bro, what you're doing is you're just impulsively jumping in because you're afraid to miss the move. You're chasing the dime and not the rhyme behind why that story is going to unfold. You're not letting your model dictate your actions. You're trying to be smarter and faster than the model you are supposing you're employing. You're only using half of it. So if you go into battle, okay, and you run out there and you have the best of a sword and the best of a shield, and it's time to go out and fight now. It's time, and you run out there, but you brought your sword, but you left your shield. How effective are you going to be? You're going to be able to thwart every attack and parry everything that's given to you? No way. You're going to get cut up and someone's going to get you. You have to have a shield. The shield is your self-control, your risk management. You have to define that. You have to know what that is. By you not waiting for the fair value gap to actually trade back up into it, you have an uncertain amount of risk that you're fearful of, which compounds that necessity about, I need to be in there. But you're admitting that, subconsciously you're doing this, by the way, you're admitting that whatever this trade does in pain, I'm going to take it. I'm not a wimp. I'm not going to tap out. I know it's going to go there. They're not going to shake me out of it. I know it's going to go there. Now apply that same measure of conviction. If you waited for price to get up into the fair value gap, know exactly where to place your stop loss at, and then hold that same measure of confidence and conviction once the model presents itself, and then you submit to the whole delivery when it runs there. That is better than sex. It's better than anything else out there because you have conquered yourself. You've conquered your fear. You conquered the uncertainty. You conquered what if anybody really knew what I was feeling while I was in this? And if they knew how I felt right before I pushed the button to get in, even though there isn't any real entry in there, you would feel ashamed and embarrassed. It removes all that stuff. And you feel empowered. You feel strong. You feel centered. You feel balanced. You don't feel any kind of impulsiveness. And I went through a lot of that in the beginning. I went through so much of that. And I wish I had what I'm talking to you with, because I would have immediately implemented it and I would have stuck with it. And I would have said, this is the way to get there, because there is no other way to get there, because there is no other way. You continue to keep doing what you're doing, nothing's going to change except for the greater measure of uncertainty, regret, frustration. You're pushing your target of consistently profitable farther away by doing what you're doing. Can you see that?
Yes, I can, sir.
Okay. So now that you have a plan of action and what to do, it's up to you whether or not you're going to submit to it. If you don't do it, nothing's going to improve. It's going to get worse because you're going to have more time doing this, which is not following the model, which is not doing what it is that you should do. But because we're like cavemen, I'm going to get in there right now. I feel like I got to just get in there and do it. When you have to remind yourself, there's rules. There's rules you have to engage. There's rules of engagement. And by waiting for this clear advantage is what it is. You know why you're entering, when you're entering, and how it's going to afford you a measure of risk that you're easily accepting. Because your stop loss, if you enter with the fair value gap, is going to be way less in terms of stress and monetary risk. because it's defined by one tick above candlestick number one or below the low of candlestick number one if it's bullish. But you have to submit to old data, trick yourself into thinking that you gained that experience by doing it by your annotations in your journal. Talk it up. A lot of guys don't want to do it because they think, oh, it's a fraud, it's a scam. It's nobody's going to get anywhere by doing it. I'm telling you, every one of my students that make millions of real dollars did this, and half of them resisted me in the beginning. I can show you if they were honest and said, hey, let my emails, let my letters I mailed to you, video conference calls, let that come out publicly. And you would see them crying, weeping. I hear you say it, but I just don't do it. I just don't do it. And I said, when are you going to do it? Because I can't make you do it. Kit and the rest of the community can't make you do it, man. None of us can make you do it. But you have to realize that what you're resisting and not willing to put yourself in the winner's seat the right way, you're the one at the wheel. You're driving that. And the only reason why you're not getting there quicker and smoother is because you're resisting, because you want to do it a different way, because your natural impulses as a man is, I know I'm right, but I don't want to miss the move, as if that's the only move that's ever going to happen. And that's the reason why I teach on these lower time frames, because there's so many opportunities to prove to yourself that you don't have to be right every time. You don't have to take every single trade. You don't have to force yourself into the trade to get that run to that draw liquidity you're so passionate and confident it's going to hit. It's easy to feel like you have to do more than what's necessary. And as men, we have to dial that stuff back. I hate to say it, but that's exactly the reason why women make better traders. They don't have this tendency to be right about it. They don't care. They're in there. This is what the rules say. This is how I'm trying to make money. The framework on this setup is this is how much money I can make. So where am I going to define the risk? Well, the model says this is where I'm entering. This is where the stop loss goes. How many contracts can I afford to trade within that parameter? They put the trade on and they wait. They wait. We have a hard time as men doing that because we have no problem standing in front of a moving train. I'll play chicken with train all day long. It doesn't usually lead to a longevity in life, but we're willing to do that. And you're trying to stand in front of a train and say, okay, I'm going to anticipate this happening. I'm predicting the future. I know it's going to happen there. But now you're inviting the very toxic things of how much drawdown are we going to have to go through. And then what happens is any drawdown becomes exaggerated and you feel it bodily. You feel it. It's not just like, well, this is uncomfortable. No, you feel it. Your heart palpitations will happen. You'll start breathing heavy. And if there's anybody around you love and cherish, you're going to victimize them. You're going to be short with them. Don't talk to me. Or if you do talk to them, you're going to be mean to them because you think they're like a vampire stealing your attention, and that attention being stolen from you worrying about how much risk you're going to have to take on is going to now cause that problem in your relationship. And that compounds into what? Better, easier trading? No way. So what you're doing is you're in this vicious cycle that a lot of men go through. They do this thing over and over and over again. And go back to what was taught. You have to know what you're looking for and entering on. The benefit is it removes all the uncertainty of where risk is. It removes the wrestling match of, I have to get in right now because I'm going to miss the move. You don't fear that because you've seen enough of these happen that every single day there's dozens of these setting up. Dozens of them. And if you know that this is the frequency in which they occur, where's the necessity for you to just plow in there because I got to get in there? It's removed by that. So the common denominator is, and this is what I may be wrong, but this is what I'm hearing from you, okay? And you tell me if I'm wrong. It's okay. I can accept it if I'm wrong. I hear someone that's passionate about what they want to do, and they believe in what they're learning, but they're not forgiving enough in themselves to allow themselves to develop patience in a process through a protocol of action by utilizing the implementation of the fair value gap that you're trying. You say you're interested and you see them, that's your model, but you're not actually using it. So if you are not using it, it's not your model. Your model is chasing price with a draw on liquidity. And hey, look, there's people out there that make money doing that, but are they comfortable? Are they living a long life and healthy? They got cortisol pumping through them all day long. Their organs and their blood vessels are getting screwed all up and their health is diminishing. That's what I did as a 20 and 30-year-old. I did that. And that stuff wears you down. And it's an easier way of doing it and you have to let yourself do it this way. Here's the fair value gap. It's there. I cannot, in good conscience, call myself a fair value gap trader and utilize this as an implementation of entering, framing my risk, and then participating in that price run. I'm strongly passionate about. I know it's going to go there. I got the convictions that says that this is going to go there, but I can't enter until it goes in the other direction of where I think it's going to go. So I'm going to be selling short when price goes up. And I got to know exactly where that's going to end. That's the fair value gap. And I have to know exactly where my stop loss is going to be. That's one tick above the candlestick number one. If I get stopped out, I don't fear it, because if it drops back down below the fair value gap and then taps the bottom of it again, I'm going to enter again exactly right there and put the same stop loss I put in before. If it stops me in, then I'm done. I start another trading day. Isn't that liberating? But we don't look at it that way. We look at it as we failed, we're weak, and I don't have anything to come to social media with. If they saw me do this, they would call me a failure. If I showed this to my wife, my girlfriend, my kids that are looking up at, and all these things, we compound that. We make this out to be something that's not. It's money. When you go to your job, when you run your business, you're doing the same things you did the previous day. You sell something, what are you selling? I don't know, whatever it is you sell. You're going to change your product because, hey, I'm a good salesman. Let me just try to sell everything out there. No, you sell what you know. You sell what you know. And in this model, if you're saying the fair value gap is your PD array, then you have to know that that's what you're implementing your entry on. And you can't do anything otherwise. You can't do anything but that. Does that make sense?
Yes, sir, it does. I appreciate it.
Not a problem, man.
So CB, just want to make it clear. How's it feel to get one-on-one mentorship from ICT on live social media? How's that feel, getting that one-on-one experience? How much do you think